First one that we're looking at is our aggressive portfolio. This is a portfolio that was designed for a 25-year-old, assuming, of course, that you have your entire working life ahead of you and that is your time horizon. So we're looking at someone who has at least 30 years of investment in front of them, and the total amount invested is about 6 lakh rupees. The current market value of that portfolio, the 6 lakh rupees, has grown to 8.86 lakh rupees with a total profit of a little over 3 lakh rupees. That's a return of 17.38%. I'm going to give you a list of the funds that we have in this portfolio. 10% in the DSP BlackRock short-term fund, that is the allocation to debt. There's IDFC Premier Equity Plan A, Quantum Long-Term Equity, SBI Magnum Emerging Business, UTI Opportunities. Narendra, are you happy with how the aggressive portfolio has done in the last 5 years? Because remember, when we started this show in 2009, we said long-term is 5 years or more. Now we've completed those 5 years of long term. Is this how you hoped the fund would, the portfolio would play out?
No, I did not expect it to play out, or all the returns that we see right now has been generated in the last 5-6 months. So in that sense, the fact that this portfolio was always diversified, we stuck to our allocation. There was no need to change our positions, and most of the funds, we were still convinced. We are still convinced to hold them. Of course, we would tactically like to change some of our position, but I'm very pleased with these returns. 17-18% return in a period when the market has gone nowhere or virtually nowhere. Only in the last 2-3 months we have seen the momentum. I think it's a reward of an investor's patience or discipline of continually investing.
Well, Narendra, you have decided to make some changes in this portfolio as of today. Could you tell us what those changes are and why you're making them right now, if you believe that these are funds that we should hold on to?
I'm looking at 2-3 principles which I'll follow in aggressive portfolio. One is a very limited or a very small fixed income allocation, but it should be continually rebalanced. Have about 40 to 50% into mid and small cap, and that too entrusted to a very high quality, into a high quality portfolio and entrusted to a skillful hand, and that is where the selectivity comes into play. So that is what I have tried to do. Though initially the principle was the same, but my mid and small cap allocation in this portfolio, I was trying to keep it lower than 40%.